Hey Tom, very good to see you. I want to ask you a question because I keep hearing other people ask it. Is now a good time to rebalance? Of course, they're asking because we've talked about it before, all the recent market volatility. And just to put the question kind of into perspective, I want to show you asset classes year to date. When we look at some returns, what stands out to me here is that stocks, they're down 15.7%. So should we be consider rebalancing now?
It the answer I think is more of a it depends.
Mhm.
People have to understand what they're trying to get out of their portfolio or their asset classes. For someone to get out of something now, equities, S&P 500 to go into oil, gas and oil probably doesn't make sense at this stage because it's up so far. Uh,
Mhm.
I think more importantly, what people have to understand is what's the line in the sand? What's the number that you are saying to yourself, "Hey, I can't lose this." Then, once you understand that, then you can reallocate or change your mix or utilize different vehicles that are available out there for your portfolio.
Mhm.
A couple of weeks ago, when we in our last conversation, we were talking about missing out on the best 10 days of a recovery. So if you're looking to rebalance because all of a sudden you've gone through a market downturn but you've never done it consistently, it probably doesn't make a whole lot of sense to do that. Right? You're better off riding through this. Nobody likes losses. You don't like them, clients don't like them, general public doesn't like them, I don't like them. But sometimes we have to go through that. Now, if you were consistently going through rebalancing, then I would say then, yeah, that's probably a strategy you should continue because you're benefiting it by it over a longer period of time, as to just panicking because the markets are down. And again, I understand nobody likes losses, but to panic every time we have a bear market and then change your strategy, for me, it just doesn't make a lot of sense.
What I hear you saying is rebalancing if it's part of your quarterly schedule or yearly or whatever it is. If it happens to fall around now, maybe you
If
should
it's a
consider
regular
it.
part of your program, yeah.
Yeah. But I do want to, though, get into some specifics because you mentioned possibly changing your allocations. We often hear of the 60/40 or the 70/30 portfolio. But again, just kind of going back to these asset classes, Tom, even bonds, we've talked about it before too. They're not doing well now.
Right. And that's because we're in a rising interest rate environment. However, um, I don't think we're going to be in a continual rising interest rate environment. And I don't think a lot of economists who have their pulse on the real world think that either. Right now, at a 1-2% interest rate, all the revenue that the government collects from us goes 20% of that roughly goes to servicing the debt. That's just the interest that the government owes, the country owes on the debt. It's not even talking about paying down principal. If interest rates were to go up to say 4 or 5%, which are more kind of the mean or the median, then somewhere between 30 to 35% of all the revenue the government collects is going to go towards just paying the interest on the debt, which leaves a whole heck of a lot less money for infrastructure, for all the benefits, Social Security, Medicare, Medicaid, military, education, everything that the government pays for, right? So I think that this bond value loss at this stage is temporary. I think we'll see interest rates eventually go down. Even Janet Yellen yesterday admitted that she made a mistake about inflation. Go figure. But with that said, I think it's just simple math that it can't, the increasing interest rate environment can't sustain itself.
Hmm. Okay.
Again, I think people have to look at, hey, what am I trying to get out of fixed income or bonds? If it's an income stream, you might have other options. Again, we talk about annuities all the time. We talk about cash value life insurance, structured notes, which I wrote an article for Retirement Daily a bunch of months ago. It's a two-part piece. You could talk about other types of commodities that that might be better. So there's a lot of other options. People aren't stuck just with bonds.
Right. So if somebody would like to talk through those options or have you take a closer look at where they are allocated, what's the best way to reach you?
by phone or by email. So 973-394-0623 is our direct line to the office. TJ O'Connell at internationalfinancial.com is my direct email address. And I'd be happy to speak with whomever has questions about it. Sometimes you won't like the answer, right? But I'm gonna shoot it straight with you.
Yes. All right, Tom, thank you.
Thanks, Erin.